This video is for everyone who is affected by our economy. I'm going to give you the solution as to how to fix our economy. It requires zero bailout dollars and actually gives money to the government. We need to do two basic things. One, we need to refinance every homeowner who is upside down into a true FHA streamline at 97% of the present appraised value. And two, the lenders will receive an equity share silent second worth 50% of the homeowner's net equity up to the full amount of the deficiency. It is due upon sale whenever the homeowner decides to sell his property. Now, this program does not need any bailout money. It will not use one taxpayer dollar. That money can be best used to create jobs. What I'm about to present you is an outline as to how to go about doing this. It isn't rocket science. It's actually easier than filing a 1040 easy. Very simple. The solution to fix our economy. Congress and the President must mandate 1. A 90-day moratorium on foreclosures. 2. A 90-day forbearance. Basically 1 and 2 are timeouts. Number 3. 3 temporary payments with a maximum 2.5% margin on adjustable rate mortgages. 4. Streamline the FHA HOPE for Homeowners Program. And number 5. Implement the REO buyback program. Now we know 1 and 2 are timeout. Let's look at number 3. Number 3 is 3 temporary payments with a maximum 2.5% margin on adjustable rate mortgages. Let's take a homeowner with a mortgage of $320,000, an interest rate of 6%, and a payment of $19.19. 2 years later, their interest rate becomes a margin which is then tied to and added to an index, let's say 3.5%. That gives them a new interest rate of 9.5 and a new payment of $26.57, which is an increase of $738. Now, traditionally, margins on mortgages are between 2 and 2.5%. Now, let's replace that 6% with 2.5%. Remove the old interest rate, payment, and its increase. The new payment is $19.19. Depending on the index, the new rate may not be the same and is not the objective. Remember, this is a temporary payment structure during the 90-day timeout period. Let's recap. 1 and 2 are timeout. 3 is a temporary payment. 4 is the actual and permanent solution. Streamline the FHA HOPE for Homeowners Program. I'll cover 5 later. Now let's cover number 4. We need a true streamline for the HOPE for Homeowners Program. The program as it is right now is not working. What we need is all homeowners who are upside down or underwater to automatically qualify to refinance their mortgage using the new FHA Secure HOPE Streamline, provided they 1. Occupy the property as their residence, and 2. Made their fixed interest rate payments on time. Verification of employment, income, and deposit are not required. This process will circulate money immediately. For example, say we have a homeowner with a mortgage of $320,000. They pay for an appraisal and the property is worth $240,000. The new loan will be 97% of that value, in this case $232,800. With a 6% interest rate, the payment is $13.96 per month. There's a one-time upfront mortgage insurance premium of 3% of the loan amount, which is $69.84. This amount goes directly to the FHA to cover foreclosures. After the typical closing cost, the lender receives $220,765 now within 90 days. This is key. Not only do they avoid the costly foreclosure process and keep homeowners in their homes, but the lender has liquid cash to circulate elsewhere, benefiting our economy. Just as important, these mortgages are federally insured and not only cost absolutely nothing to implement, but the government actually receives funds for the insurance pool. The new 30-year fixed payment is $13.96. The monthly mortgage insurance premium of 1.5% per year is $291 per month, which gives them a total payment of $16.87 per month. Benefits for the homeowner are, first and foremost, they remain in their home. A second benefit is that they had a mortgage of $320, but now they have a balance of $232,800, which is a reduction in principal of $87,200. A third benefit is their original payment was $1,919. After 2 years, it adjusted to $2,657. Then we got them back down to $1,919. Finally, they refinanced into a permanent 30-year fixed-rate loan, in this case $970 less than the present payment of $2,657. Now that's better than any stimulus package I've ever heard of. Estimates will vary by case and region, but are very relative. But you say, what about the banks? Well, what about the banks? Let's take a look at their present mode of operation. The standard procedure is foreclose, repossess, and sell at public auction. After a year in foreclosure, they put it in the market for, say, $240,000. After another year, they sell it, pay sales commission, property taxes, and after closing costs, they net $205,800. The key is it took 2 years to recuperate part of the $320,000 they invested. Compare that to the solution where they would net $220,000 now within the next 90 days. The bad news doesn't stop there, because they also have 2 years interest, late fees, legal fees, and miscellaneous fees that they lose, totaling approximately $72,000. That is a total of over $186,000, or 58% of the $320,000 invested. Here is a solution for the lender or bank. The bank nets $220,765 from the FHA refinance, but they were owed $320,000, which leaves a deficiency of $99,365. The homeowner will execute a note in favor of the bank, the share equity silent second. But what is the share equity silent second? The share equity silent second is a lien subordinate to the new FHA loan, obviously due on sale. It is valued at 50% of the homeowner's net equity proceeds at the seller's future sale up to the deficiency amount, which in this example was $99,365. If there is a second mortgage now, the value is split 40% and 10% respectively between the first and second mortgages. There are no payments due and the interest rate is zero during the life of the lien. The entire return is the corresponding equity percentage realized at the sale and is based on the present zero equity. It is negotiable at any rate of discount mutually agreed to by both the homeowner and the lender at any time during the life of the lien. The homeowner may refinance to pay off the equity share lien as negotiated and agreed upon using the FHA STREAMLINE after 1 year, equity permitting. We've covered 1, 2, 3, and 4. Now let's cover 5. The REO buyback program. All subprime borrowers who lost their homes within the past 12 months and the lender has not sold it can buy it back from the lender using the FHA Secure Hope STREAMLINE program, provided they 1. Occupy the property as their residence, and 2. Made their fixed rate payments on time. This program will get properties off the market and create a modest boom in our economy. Let's look at bad solutions present and proposed. Number 1. The standard procedure. More foreclosures. The status quo is doing nothing for our economy and actually hurts it. For the consumer, it's absolutely devastating to lose their homes. For the banks, no mortgage payment means loss of revenue, their income. Repo inventory means their investment is non-liquid, frozen. Repo sale means they actually realize those capital losses. For the economy, a tight credit market means higher credit standards, which means less mortgages, consumer and leisure expenses, less student loans, auto loans, and even employment. For the financial stock markets, there are absolutely no confidence, which keeps investors away. Stocks plummet and possibly disappear. Number 2. Treasury buying troubled loans from the banks. Paulson finally realized it was a horrible idea, but is still clueless as to what to do with the $700 billion of our tax dollars other than throw it at the banks. Number 3. Buying stock in the banks. Loans are not being paid. There is no value in any stock if they are not earning. This is a financial Iraq war. No clear plan and without an exit strategy. Number 4. Loan modifications. They are erratic, uncertain, without principal reduction, and temporary. Bottom line, Congress and the President must mandate only proper use of our tax dollars to insure mortgages and create jobs now.